What's going on, chat? Taj, BK, my name backwards. What's going on? Sif, Media, Efter, Jazz, Yusuf, Tactical. Aurelius, Cop. How many trades? Ooh, didn't even say hi to me. Just straight up, like I'm a sex toy or something. How many trades should you collect in demo before going funded? A couple of hundred, in my opinion. The more the better. But what's up, Jaden? Sebastian, Paso, Ash, live on a plane. You got Wi-Fi on a plane? Nice, bro. What's up, Jazz? Alpha, Frenzy, Mike. Keen to see how you roll. Keen to see how you roll into going into a last trading month for the year. Well, I'm down for the month, so I'm probably going to just trade one more week. And if it's a losing month, it's a losing month. It is what it is. Statistically, I'm bound to have one. So if I have one this month, take off December, come into the next year fresh. I think that sounds like a good plan. And I'll just sit on the rest of my wins. Ooh, big yes. I like that profile picture. Is that a matte black J2? Oh, that color's so sexy, bro. Every time I see it. What's up, Brian? Harry, Felix, KG? Did you find your wife at the fights yesterday? No, I did not, bro. I just had a good time supporting the homie, and that's it, you know. And back to training tomorrow. Zachariah, what's going on? Tori, how do we go this week, chat? How many fundings do we have? Okay, so this week was half and half. So we had one. Okay, so it was from the 28th. 28th. So we had 1, 2, 3, 4, 5, 6. 6 this week. So congratulations to the 6 people that got funded this week. We have 1 funded trader for the month of November. So that's pretty good considering we only had 1 day of November. Nice. 1 for 1. So that's going to be a little bit of a longer one, chat. So I hope you got your notes ready, and I'll try cut out the boring bits and go straight to it. That's going to be a... Oh yeah, it does drop today. I completely forgot about that, not gonna lie. Yeah, it's nothing too crazy, bro. Just a 6-minute car video tour. I don't like to brag or anything online, so I'm not gonna drag it out. Just a quick one. You'll notice that whenever I'm just showing something that I've worked for, it's usually a shorter video. And then when I'm explaining something, you know, going through experience or going through something on the charts, it's usually a 10-minute plus video. So, yeah. What's up, Mikey? He found her at the club. Yeah, I did, bro. Don't get me started. Don't get me started with what I saw. I was sober. I saw everything. I saw all the bullshit. What's up, Davo? How are you, bro? Data collection is a game changer, bro. If you actually do it, I know it takes, like, it's actually boring to do data, and it's actually tedious. I don't like doing it. I don't enjoy it. But it's just something that has to be done. Like, because realistically, it's just taking your time, and only benefits can come out of it. I'm an old head, bro. I'm unk status. Pushing 40. How's the club? What did you see? Wasn't too bad because I was with the fight team the whole time. But like there was a couple, you know, bits and pieces where you're like, fuck, you're a bit shameless. Like there's people around and you're just a bit fucking shameless, you know what I mean? What happened, KG? How'd you lose 5 bands? How do you prefer data collection, Notion, or TradeZella? TradeZella's more journaling. Data collection's more... TradeZella's more like your basic stuff, and then data collection's more going into your system to find out what works best, if that makes sense. So trade journaling just gives you like a general oversight of what, like your win rate, the pair you trade the most, like just your basic stuff like that, I guess. Great week, not just in trading, but with data collection, heaps of little nuanced gems that I've seen repeat in price. Oh, you gotta drop that, bro. You gotta drop that in the forex chat for the boys. What are your thoughts on taking a gap year? Probably not the best thing you can do. I didn't take one. I just went straight into it. Alright, so 18 plus risk to reward week. How did the rest of you guys go, chat? Okay, gold is going crazy. When are we getting into the session? We're about to get into it right now, my boy. 11 risk to reward, nice. He's gonna find his wife for the Halloween party. Or stop the cap. Don't anger me before the session, bro. +1, 7 on the personal on Friday. It was good to finish off the week on a good note. Nice, bro. I can't relate. I just had my bias wrong on the Friday, I guess. 9 risk to reward week. Nice, bro. Nice alpha. Alright. So let's get straight into it today, chat. Did you enjoy the clubs? I only enjoyed it because I was with the whole fight team and I was sober the whole time, and it was just a good time to celebrate Albert's win. So honestly, just because I was with a bunch of friends, and we're only in the club for a little bit, and then we went to the bar, which was fun because they had the punching machine and these motherfuckers just went ham on it. So I did like the bar a little bit more, to be honest. It was more chill vibes, if that makes sense. But there's still shameless people in the bar and the clubs. Crazy. What's up, vibes? Alright, so today we'll be going through an advanced bias masterclass, breaking down our external factors and then going down into likely scenarios that can play off different types of external factors that align and don't align. So we're going to go through a step-by-step process. Would you ever get into pro fighting? I'm training every day pretty much, bro. So I've only done one interclub before, but now I'm going to double down on Muay Thai and properly go hard on it. 22 risk to reward on Thursday alone, bro. That's fucking crazy. I don't think you realize how crazy that is. Alright, let's get straight into it. So first order of business, DXY analysis. So when we come onto the charts, the first thing we're going to be doing is going onto DXY and determining a bias on there. So DXY is one of the external factors that we consider. Okay. With our DXY analysis, this is the first order of business to determine what your bias is going to be when looking through the high time frame. So that's the 4-hour and daily, as well as the 15-minute and 30-minute. So every time we look at DXY, I don't really look at the lower time frame. Only thing I'm looking at DXY to determine a bias before looking at the pair that I'm trading. All it is the high time frame, 4-hour and daily, and the 15 minute and 30 minute, and you can add the 1 hour onto there as well. But anything on the lower time frame, I'm not concerned about it for DXY. So the way we determine our bias is we're going to be looking at structure, as well as looking at potential weak highs and weak lows, and we're going to be making use of internal and external structure as well, while keeping in mind the weak structure that we can mark out. So, for example, following the first order of business, we come into the daily. Okay, let me move this down a little bit. Alright, so we come into the daily, and this is what we go over here. So all we're doing is coming in, we're going into the daily 4 hour first. Usually I like to stick with the daily, unless it's not making sense, then I'll start to look at the 4 hour as well. But the first order of business when we come into the charts to help determine our bias, because we're not even touching the pair that we're trading at the moment. We're touching something that we can't trade. We're coming onto here just to help determine our bias, to see where the overall direction of price is going. Okay? So keep it nice, short and sweet. I'm not going to drag it out. I'm not going to yap on forever. So here we have a daily structure break. That's the last place that we've broken structure, right? Structure to the upside. Last bullish structure break. And our protected low has been respected the whole time. We also haven't gotten any new highs. So something to keep in consideration is this. We have not gotten any new highs. These highs have not been taken out. So we had this big run up, new structure put in. We had a correction, and since then we haven't put in a new high. So we understand that we're in a range at the moment. Protected low has been respected the whole time. Cool. So protected low has been respected. We haven't gotten a new high, so that must mean that we're in a range, which we're clearly in, right? So externally we're in a range, but we're still respecting protected structure. Now we follow what price has been doing, right? Staying in the range. Failed to put in a new low, we push up. Failed to put in a new high, we push down. Failed to put in a new low. 15 minute, 30 minute order flow shift. So given that information, I can identify 2 weak highs that can potentially be targeted. Even though we're in a range, the highs here are still weak and can still be desirable targets. So just based off doing an external structure analysis on DXY and identifying, the lows and the highs that failed to be put in, and also acknowledging that we're still within bullish structure here. And then we also have a look here. Okay, so we have a demand POI over here. So the last up candle, as well as the demand wick over here, because that's unmitigated. So we have black candle and demand wick. So the wick from here, because it's unmitigated. So that's our demand, and we drag that all the way across. Let me make sure I've drawn this out properly. There we go. And we see price has tapped into it. Like, when I say something like this, even if I don't catch it, it gives me a newfound appreciation for the market. Like, I just appreciate the market when you see something like this, because look how clean this is on a daily time frame. This look how much it mitigated it. Just a brief mitigation, right? Comes into that zone at the protected low, sweeps this inducement as well, because we're building out our high time frame over here. And just look at that. Look at that. Had a similar sentiment on the weekly outlook. So I was doing this week by week, and this never closed below this low over here. So these lows never closed below here, and we respected it. So it made for a beautiful setup. So now we see that, and then obviously order flow has shifted bullish on the daily as well. We're getting new internal highs on DXY. So now we have a pretty strong bias over here because structure break, okay, cool. Failed to put in the new high, okay, cool. Failed to put in the new low, okay, cool. So this low failed to put in the new high. Price came down, took out the weak low, failed to close below this weak low, respected demand over here, respected our original external bullish structure. And look at all the information we've been able to get just by going into DXY and zooming out and going through the daily time frame. We've gotten a boatload of information over here already, okay? So, back to our little checklist. So we've determined overall structure on the 4 hour and the daily. Now we break it down into the 30 minute and the 50 minute to have an intraday bias that aligns with the higher time frame in terms of structure and weak lows and whatnot, right? So now we come back over here onto the daily, and we've determined our daily and our 4 hour time frame, right? We've determined bias here. External structure's bullish. We know there's weak highs that we're heading towards. Order flow shifted bullish as well. Sorry for the helicopter. This motherfucker is flying eye level with me. It's crazy. Loud as. I'm sorry, chat. And now we see that, okay, so this is the 4 hour internal break structure. Cool. We know that our high time frame is heading up higher. So we know that it's going to push up higher into some form of weak high or weak low. Oh, sorry, weak high. We know that we tapped into demand. 4 hours clearly bullish, daily is clearly bullish, externally and internally, so order flow and external structure. And now all we have to do is map out what the 30 minute is doing, right? So again, we're just mapping out the structure. We're just determining what price is doing, right? So given that the high time frame is extremely bullish, wouldn't it make more sense to take advantage of the longs here on DXY? Or if DXY is pushing up higher, that means there's going to be a huge sell-off on AUD USD, Euro USD, Great British Pound USD if it is correlated. And you know, for example, Australian dollar is not fundamentally bullish or bearish. In normal conditions, we're just going to keep on getting new structures to the upside, and order flow is going to maintain and stay bullish. Now when it's like this, that's going to make it a landmine, sorry, not landmine, a gold mine for continuations. So the whole way through, internally, externally, there's new structures to the upside, right? So we're just determining bias on the lower time frame. Sorry, on the 15 minute and the 30 minute. And it complements what the higher time frame is doing. We know that the daily is heading up higher, right? And the whole time it's happening, we're getting new structure to the upside. So we know that we're clearly bullish over here, right? Continuing to get new highs. Protected lows all being respected. So we have a very strong bias over here on the 30 minute, 15 minute, because it's clearly bullish. Order flow is clearly bullish. We're getting new highs, respecting demand. So we already have a strong bias here. That's honestly, a 2-year-old can get this. The bias is already established. We went into the 30 minute, 15 minute, we saw that, okay, order flow is bullish, market structure. Okay, so order flow is bullish, yep. We're taking out weak highs. Yep, weak high, this fails to put in a new low. Yep, this fails to put in a new low. Yep. And even if it does put in a new internal low, okay, cool. We're still respecting our original internal protected low. So this order flow shift is just a correction, and as long as we're still respecting our original protected structure, that's going to push up, and we're going to keep going higher. So going back to our little checklist. Where is it? Here it is. So we established the 4-hour and daily overall direction with internal and external structure. Be mindful of order flow and any weak structure that price may be heading towards, which is exactly what's going on over here. Price is heading towards this weak structure and this weak structure as we failed to put in the new low over here. And us failing to put in the new low over here is complemented with a bullish entry model over here that we can obviously see. So our bias is very strong at the moment, and that's probably why shorts have been playing out for the last couple of weeks. It's for the exact reason I just explained here that I've just determined the bias for. And we've just gone into the 15-minute and the 30-minute. And we can also incorporate the 1 hour if we need to, if the 30-minute and the 15-minute isn't clear. You can always incorporate the 1 hour if you need to. And remember that having a bias on the 30-minute that aligns with the overall direction of the higher time frame is going to be a high probability move for you to take advantage of, because even if you mess up your entry and you go into a little bit of drawdown, because order flow is clearly bullish on the 30-minute and the 15-minute, and it aligns with the 4-hour and the daily, because we have a weak high in the daily and the 4-hour, that 30-minute is going to keep pushing up towards that if order flow stays bullish at that time. So once DXY has been established, like we just did over here, we established where it's going, right? We go into the high time frame of the pair that we're trading with the same formula. In terms of looking at the high time frame first, find overall direction, and there's a few scenarios that can be not as helpful. For example, DXY sometimes may not align with your pair, and the only way that can happen is if your pair is fundamentally bullish or fundamentally bearish. So what I mean by that, right now it looks, you can see over here, okay, perfect example. So DXY is clearly bullish, so that means that AUD USD is going to be bearish, right? Now, if AUD USD is bullish, and let's say that we're up 0.3% over here, and it's aligned with DXY, which it shouldn't be, that means that something else is happening, because these two are inversely correlated, and that's how it is normally. But if they are positively correlated, that can only mean one thing, and that can only mean that AUD is fundamentally bullish, because DXY is just a measure of the US dollar on its own. So if they are positively correlated, the only logical explanation here is AUD being fundamentally bullish. And then the only way that we can see that is if we look at like AUD CAD, even something like this Euro AUD, AUD JPY can as well, but Euro AUD and AUD CAD, and these ones are a little bit more reliable, just because the yen is a bit of a powerhouse, and when you compare it to Euro AUD and AUD CAD, AUD USD usually follows these two a lot more than it does with AUD JPY. So you can have a look at that for yourself in the coming weeks if you like. So if there is a situation where we are fundamentally bullish and we're still trying to determine a bias, and DXY is not aligning with us, this is the external factors that we look at. This is how we help find our bias, because we're going to be able to see that, okay, even though DXY is not aligned, okay, cool, AUD is fundamentally bullish today. So if that's the case, it's going to be right here on the screen. You can see the percentage change, and it's going to be easier for you to take advantage of. This doesn't happen as often though. Most of the time DXY will be aligned, but maybe for every 2 out of 10 times where it's not aligned, you can just look at the watch list and see if price is fundamentally bullish or fundamentally bearish. So for the time that price is aligned with DXY, in terms of being negatively correlated, we can proceed with our normal criteria and look to establish a high time frame direction through structure and determining our weak highs and our weak lows with internal and external structure. So now we can head over into AUD USD. Let's go on this source, pop over onto the daily, and now this is what we got over here. So right off the bat, looks pretty clear to me. Looks very clear to me what's going on. So this structure overall, remember when we looked at DXY, the whole structure that we're looking at, even though it's in a bit of a range, we can still determine it as bullish structure, and this is the beauty. This is the beauty of a negative correlation between these two. It's quite beautiful, to be honest. Look at it, right? Nice bullish structure. Have a look over here. It's the same thing. It's the same thing. Structure breaks over here. Protected high over here. And you drag that all the way across. Price never closed above. And we stay bearish the whole time. And look, it even has a sweep over here. Nice sweep of these highs, right? And you know what's even better? There's no possible supply zone over here because everything else is mitigated. So for price to come all the way up and come up into the protected high, there's no other option for it to come up and respect something and then come back down. If price is going to come up and come back down, it has to respect a protected high. There's no possible entry for us to come off, one of these mitigated zones over here. I mean, it could give us the deeper mitigation, but very unlikely, right? Those don't play out as much, as often. So we can see that we're in a range over here. We didn't put in a new low over here as well, right? So we're still just determining our bias before we get into that 15 minute, 30 minute and get into our lower time frame. This is still part of determining our bias and understanding what's going on, where price is heading, right? Because that's what we want to know. We want to know where price is heading so we can just take advantage of it with continuations and be stress-free to the best of our ability. So this low never got taken out, right? This low never got taken out. We never got a new low. Price had a correction, failed to take the high. Okay, cool. Now there's a weak low that never got taken out. Price comes back down, fails to take the weak low, but now we have an order flow shift, and now this high is weak. So we're just following the sequence of events essentially, of what price is doing. Pull back, failed to put in a new high, came back down, did not take the weak low, and over here, price respected our lows over here. So now we have a weak high. Price comes back all the way up. And remember, we're still in this high time frame range over here, yeah? And we're still getting to where, we're at over here because we got to build the whole high time frame bias to understand what's going on here. We're doing all this stuff over here, all this marking out weak highs, weak lows, mapping out structure. We're doing that so we can understand where this is going to go, where this next bit of price action is going to go. So price eventually comes back up, sweeps that weak high, and then we come back up into our original protected high. We respect it. We fail to close above, and now this weak low becomes a lot more evident because we failed to take this high over here twice from these external lows. So now we pair it up with DXY just to see what's going on. There's a very good correlation here, which is inversely correlated. We failed to put in a new high. Okay, cool. So now we've determined our bias on the daily and the 4 hour on AUD/USD. We know that price is going to head down eventually towards this weak low over here. And then we go into that 30 minute, 15 minute, 1 hour if you need it. And we just map out what price is doing, right? You map out all your external structure, help you find the bias. right? Map it all out. There's plenty of moves over here, all the way through. All the way through until it doesn't give it anymore and we start getting new highs. Let me go 30 minutes just to confirm structure breaks. So no structure break over here actually. See this chart? There's no structure break over here by our criteria because it doesn't close 50% below the body. So below the wick over here doesn't close 50% with the body. That means that this is a weak high and that gets taken out, and that does give us a structure break over here. And now we're getting this order flow shift as well. And this is protected, this low over here. And now essentially there's a potential for us to push up higher because order flow shifting. But going back over here to help understand our bias and what's high probability and what's not. And again, you mark out your protected highs, protected high, protected high, protected high. I have a look at the last masterclass because I went through in detail with all the criterias and trading. Have a look at the trading plan masterclass because I did that a couple of weeks ago. And just a heads up, chat, if you haven't watched the previous masterclass, it's best to do that. Otherwise, you're not going to know what I'm saying. So this whole time, and we pair it with DXY to help us find our bias. Even on the 30 minute, it's given us the same thing, right? Order flow stays bullish on the 30 minute, 15 minute, all the way through until it doesn't. Same thing with ADUSD, helping us find our bias. And we know that DXY is pushing up like a motherfucker, and so is ADUSD because we failed to put in that new daily high. And now that's just going to give you a lot of weak lows to take advantage from. So we know that our bias is just going to be focused on weak lows. It's going to be focused on all the weak lows until it doesn't give us a structure break that meets our criteria, and then we're going to reverse. And the same goes for DXY. We're going to keep getting weak highs all the way through. All the way through. Weak highs all the way through. And we're just going to keep respecting our previous structure. Our 30 minute structure break, our protected lows. We're going to fail to take it from the highs and we're going to keep running it. So determining your bias is simple because we're just mapping out our 30 minute. Like this is all just to find the bias. Now we have our bias mapped out, right? And we could, maybe we map it out and we get into the charts, let's say around this point, right? So this is what we have over here. We don't know that price is going to continue down all the way lower, but we know that for price to head down, we know that that's essentially pro trend because we know that our higher time frame on AUD/USD has a weak external low. And our 30 minute, 15 minute order flow is still bearish. We're still respecting all protected highs. And this is a game of probabilities. Why try to go against your protected highs and your protected lows when you've done a thorough analysis on DXY and AUD/USD on your high time frame, all the way through to your 30 minute and your 15 minute? Follow order flow until it stops working. Until, yes, maybe we could have a chance here where we don't put in a new low, right? But the bottom line is price is still going to be bearish if we're still respecting this, our protected high. If we're respecting all protected highs, price is clearly bearish. We're not going to magically turn bullish. We'll eventually turn bullish potentially, but keep going with following order flow until it stops working. So for example over here, yes, there was a weak low, but we know our external factors and our bias is still bearish, yeah? Okay, cool. Keeping that in mind that, okay, even though temporarily we failed to put in a new low over here, our external factors are still bearish, and it's probably going to be a bearish scenario around the corner. Maybe not a traditional entry model might, come through. For example, over here, all price did was failed to put in a new low, failed to put in a new high. This is a little bit of a range setup over here, and then we have an internal weak low over here, right here. And as soon as we fail to close above, rejection candle with the doji, run that 4 pip into this protected low over here, into this weak low over here. And this is just from following our bias, right? Sometimes you're going to get setups that are going to look like this. They're not going to be a traditional continuation model, but it might be a range setup where it's a weak low, right? Because we failed to put in a new high. Okay, cool. We're just playing the range at this point. I've done a masterclass on that, by the way. And we can just target this weak low over here, our immediate weak low. I found that targeting the immediate weak low is pretty helpful, because usually when you target that second weak low, the external one, sometimes price fails to close above this one or below, and it comes back and takes you out of break even. So going back over here, what I just explained, same formula looking at AD, USD, or any pair. We go straight into the 4-hour daily to determine the overall direction through looking at market structure, mapping out a whole setup on there, and determining the weak highs and the weak lows externally on the daily. And then we go onto the 30-minute and the 15-minute to track order flow and see where price is heading. And as long as that 30-minute and the 15-minute align with what the high time frame is telling you, that's going to be the move until order flow shifts in that 30-minute. Because remember, the market's fractal. What happens in the lower time frame will replicate over to the higher time frame. But for that period in time where price is aligned, that 30-minute and 15-minute, for that period in time where it's aligned with the higher time frame, like we know on AD, there's a daily weak low and a 4-hour weak low, and now 15-minute, 30-minute order flow is bearish, and we're trending. The opportunities here are going to be the shorts. Even if you miss out on something like this, right? You miss out on, let's say that, there's no entry over here, right? So this is at 24 for October 2200. 24 for October 2200. 24 for October 2200, over here. Is that over here? 24th? Here we go, over here. My bad. 24th of October 2400. So even though there's no entry model over here on the 15-minute and 30-minute, right? We're just following order flow, right? We know that this move up's a correction. It's probably going to be temporary. There's a structure break over here. There's a protected low over here that eventually gets taken out when we drag it all the way across. Then we get that full body close below over here. So protected low, that gets taken out and gets taken and turned into a structure break. And now we know there's a weak high a protected high from over here. And then we know that price coming down lower. And even if you miss out on the high time frame setup, there's still going to be something that you can take advantage on. For example, over here, if you wanted a more aggressive entry internally, you could look for something like this. And we come over to this. And then we get something like this. And we don't have to target anything too crazy, right? So we can cover the protected high over here. And let's say that, okay, our protected low over here is still intact, hasn't been broken yet. I just want to have a nice safe risk to reward over here, 1 to 3. So there still can be a good entry model over here. It just depends on what your external factors are looking like, right? I mean, if you look at it like this from the 3 minute, right? We failed to put in a new high over here. There's no 50% close above this high, so we know there's a weak low. So even though structure's bullish over here, we have a case for both. There's a potential there's a potential internal protected low setup over here from this 3 minute structure break, and then this protected low, which then became a structure break eventually. You could have taken a protected low setup over here, but you know that your externals are still bearish. You know that your 30 minute and your 15 minute is still bearish, so it's smart to go pro trend with that, because it makes the most sense, right? Because we know the high time frame's heading lower on AUD/USD. We know the 15 minute and 30 minute order flow is bearish. We've just had a decent move up here, and now we've gone sideways from trending conditions. Now we've gone sideways, and we failed to put in a new high. We know price is going to run this week low eventually. You can either go for something like that, a nice confirmed entry here until that week low, or you can even go for a range setup over here, because price failed to put in a new high over here. Doesn't fit the criteria of closing 50% above. Drop it over here, go for a 2 pip, covering the high, and then run it to the week low. So there's 2 setups you could have actually taken over here. Just pick your spots wisely. Lower time frame had its correction the whole day. Now starting to go sideways. Yes, conditions aren't as favorable over here, but it's for a reason, right? Possible reversal. And then you get a potential range setup. This is more of a reversal, and then you get a confirmed continuation over here with internal structure. And then you can run it all the way down. And just follow order flow until it turns against you, really. With this, do we tap in? And gives a rejection candle. So it's something like this, protected high. Okay, cool. Let's say you try to take it from here, yeah? And we're just following our criteria, right? Cool. There's a supply zone over here, and we eventually get taken out. Part of the game, right? Okay, cool. My external factors are still bearish at this point. Okay, if it's still bearish, right? Because I thought this was a weak low, I was going to take it. Okay, cool. If we have a lower time frame order flow shift after getting taken out over here, which we do have a lower time frame order flow shift because it's protected high, becomes a structure break. We focus on the 15 minute and the 30 minute. We go back. We try to look for something. And even if there's nothing over here that meets our criteria that we can take, cool. I'm not interested in shorts until we tap into a meaningful 15 minute supply or 30 minute supply, or unless 3 minute order flow, low time frame order flow turns bearish once again. That's the only thing that really matters. So for example, over here, there was no 15 minute, 30 minute zone. Price then has its low time frame order flow shift, and we turn bearish. And now it becomes acceptable to look for shorts once again, because we have confirmation that price is heading down lower, right? And now, realistically, heading down lower once again. Any entry models here? No, nothing over here. Over here, yeah, we do get an entry model. We do. Protected high gets respected. If you went with a 2 pip, you would have gone stopped out. From over here. And that's fine, because this is going to happen sometimes. Again, your stop loss isn't going to work all the time. You know, the guy that goes in with the 4 pip stop loss would have gotten away with something here, a nice 1 to 2. But if you use a 2 pip stop loss, you would have going to take it out here. It just depends on the situation. Sometimes you get something like this, right? and then we continue again. We hit another structure break over here. Three minute. Have a look into the 15 minute, see what's going on over here. Okay, cool. So, looking at our external factors over here, we could have taken another lower time frame setup over here, but we failed to close below. So we didn't close below over here on the 15 minute and the 30 minute. So now we know there's a weak high over here at the very least. Cool. So going back onto the 1 minute, into the lower time frame, 3 minute, 1 minute, we've just filtered out any lower time frame setups over here. There are no lower time frame setups for us to take over here because our external factors don't align with the 15 minute and the 30 minute. We know that price has failed to put in a new low. So with that in mind, it makes sense to wait for that high time frame to shift back and give us a reason, give us externals to actually look for shorts again. So we have to wait. We're looking to the 15 minute. We're either looking for an order flow shift or something on the 15 minute, 30 minute to give us an external factor that can show us that we're going to head down lower, right? And that's exactly what we get over here. So price has its pullback. We know there's a weak high, so let's wait for price to come back into the weak high. It does, and we fail to close above. So now there's actually a possibility for price to head down lower because now we have a weak low. Now our externals make sense again, and now we have a bias determined again. We have a solid A+ bias over here, and we can target the weak low. Cool. Target that. That's a +6 over here. So even though, you know, you can get away with some setups over here, a couple shorts over here, a couple shorts over here as well, but you get stopped out, but then you get another short over here. Because we've determined our bias and we know that shorts are the play, they're not always all going to play out, but compared to when looking for longs here, there's not really, like if you compare looking for longs in this sequence of price compared to looking for shorts, you're going to have an easier time looking for shorts just because there's more opportunity and it is pro-trend to the 15 minute and the 30 minute. So that's it, chat. I know it's a lot of information, but that's the full advanced bias masterclass. Bit of a long one and my voice is a bit short. Let me, sore. So swing structure is basically extreme highs or lows with an attempted pullback. If there's structure that breaks, like for example, this could be your external structure and there could be internal structure breaks over here like that. You know what I mean? You know what I mean? I'll do that today, Jasper. My bad, bro. I've been very busy, bro. I'm gonna tonight. My promise is to, because I gotta fix this up. Because apparently this says NQ plan now. So I gotta add that AU plan, and I gotta put the NQ plan in there as well. So I'll fix it up. I'll fix that up tonight. If we get an order flow shift, doesn't that align with external bias? Would you change your bias to look for internal setups? I mean, you could, but it's just a lower probability setup, right? I think I did that on Friday, and I just got taken out because the pro trend. I was against the pro trend on the 15 minute and 30 minute because I was looking for that lower time frame setup because I didn't consider the externals. So it's up to you. I mean, you could get away with it. You'd have to be very short with the targets. But it's just a lower probability setup in general. That loss would have been a break even due to the IB. Well, break even loss, same thing. You know, it's still not nice. But it's still part of it. It's still normal. Break even loss, same thing. You still got it wrong at the end of the day. Thank you, Aurelius. Thank you, Alpha. can you give us a rundown what could happen prior to the election? Bro, flip a coin. Flip a coin. You know what? Your guess is as good as mine. I'm not a fortune. I'm literally not a fortune teller, bro. But based off historical data with Trump, it should be good for the stock market, crypto, and all that stuff. So if that is the case, then DXY should sell off. So I do want to see that early next week. Maybe this protected high over here gets respected. Who knows? Because we have had a big move up here with no meaningful pullback. So I would not be surprised if price all of a sudden has a big move down here for the election. But we'll see, bro. I don't even know if Trump's going to win. You know, so anything can happen really. This was the exact information I needed to go over at this time. I've been through some personal stuff lately, which has resulted in, but we all go through something, and it just messes us up, and then we lose, and then we just get pissed off and like crash out. Happens to all of us. That's why I just like to spend less time in the market, you know, in case I do have some shit going on in real life. How do you determine 15-minute, 30-minute week close? Don't you use a low time from order flow shift? Yeah, I do. Lower time frame order flow shift is the correct way to use confirmation, but if it does fail to close above or below with a 15-minute or a 30-minute candle, usually there is a lower time frame order flow shift in that candle. Best way I look at the relationship is opening both charts on a single tab, AU and DXY up, and then invert the DXY scale. Good way to do it, but you got to think there's a lot of newbies out here that don't really know that and understand how to do it, so I just got to do it this way so they understand it. Thank you, BK. Appreciate you, bro. I'll catch you in the chat. Good shit this week. 18 risk to reward, was it? Thank you, bro. On the last example you showed, when we come off the protected high, would you still take it even though we have 50% close above on the same? On the last example I showed, this one. Is that 50%? Yeah, but this is 15-minute, 30-minute. It's not there. I thought that was pretty self-explanatory. Just by looking at the 15-minute, you can tell that 30-minute never closed above, or never even got close. So that already overrides my 15-minute. I already know we go with what our high time frame's telling us. Okay, little Timmy has a look at what's happening on the 15-minute. Little Timmy, okay, break structure. Oh, there's a demand over here. Cool. Yep. I'm gonna take it off here. Little Timmy. Oh, perfect pure Y, hasn't balanced. He's going to take it there and just get railed. So, you have to look at the 30-minute, it was always a weak low the whole time. Always trust your high time frames. All good, Sif. Enjoy the rest of your day, bro. All good, Taj. How do you invert the scale on the chart? I don't invert, bro. Ask one of the boys. Thank you, Aurelius. Appreciate you, bro. Alright, chat. Let's just do quick outlooks and then we'll wrap it up. Boy, I am parched. Okay, so 30-minute. A bit of a range, looks like a bullish range for me. Alerts at the top and alerts at the protected low. Self-explanatory over here. Would not be surprised if we push up higher if Trump does win. That's my take anyway. And over here, still bullish, still respecting a protected low. So we do have to see if price comes back into this low, or we come up and take out the highs and we keep going. But remember, if we do break down lower, there's pretty big implications because we haven't had a correction over here on this higher time frame on DXY, and we're in protected structure over here. Even though it's after the order flow shift, could be a potential F-boss. Just something to play around with and some food for thought. Election 50-50 right now, yeah, we gotta see. Let's see who gets it done. I hope Trump does. Thank you, Mr. My Name Backwards. Is that the ocean in the background? Yes, sure is, Mark. Alright, boys. I'm gonna go get some rest because I'm a bit tired from last night. I will update NQ and AU training plans, and I'll put it in the Discord for you boys. So, if you guys have any questions, feel free to use the markups and questions tab, because that's where I give the direct feedback to you guys. If your personal is capital gains, do you pay tax? Capital gains is capital gains tax. So personal account is capital gains tax because you're using your own personal. So every time you withdraw, you pay as capital gains. Thank you, Alpha. Thank you, Jaden. I appreciate that, bro. Thank you, Mikey. Thank you, Jez. Thank you, Taj. Enjoy the rest of your day, boys. I'll catch you on Wednesday. Maybe an NQ live stream. We'll see. I gotta see what I'm doing on Wednesday first. Or maybe another double session. Thank you, Vibes. Thank you, Felix. Appreciate it.